Okay, this topic will be value investing. So let's ask it, what is value investing? It's a strategy that involves investing in stocks that are under. Okay, it's giving us the same answer as before, but since this is a new video, pretty much, if you didn't watch the first video, I highly encourage you. That way, you're kind of you know what we're talking about. Value investors look at stocks that are undervalued compared to the potential of the overall market and believe that the stock true worth will eventually be retired in the reflected in the price. The approach of often tries was legendary investors such as Benjamin Graham or Warren Buffett. Okay, there we go. Value investing can be a long-term investing strategy. So first thing that we need to do know about this is, let's say you find a stock that you think that it's undervalued according to the market. You really need a longer term approach. I'm going to give you an example right now about, let's say, Facebook. So Facebook was undervalued for pretty much most of last year, and people were just, the market was not valuing it correctly, but you had to have a longer term approach in order to kind of wait for it. And then now in February of 2023 is when this stock pretty much took off, and it's getting to, let's say, a more fair value for that stock. But for most of that, for most of 2022, it was trading in the 160s, 150s, went all the way down to $90, which is just hilarious. But that's what, if you're trying to kind of value invest, the first thing you need to know it is long term, and then definitely finding a stock either that the market thinks that it's undervalued, or at least that you have a belief that it is undervalued. It's important to conduct there is research and analysis, and to have a strong understanding of the company's financial health. Definitely value investing needs some research, and that's what we're here doing. Earnings potential and growth potential. Okay, let's say, can you give us some examples of value stocks? Stocks are stocks that are fair and understanding by the market. Here are some. There we go. So it's even giving us stock recommendations. This thing is just amazing. So Johnson and Johnson. Johnson and Johnson is a pharmaceutical company, medical devices. It's in the healthcare industry. Okay, definitely everything. Pretty much the entire healthcare industry is a value play, because regardless of what the market does, healthcare, you just need healthcare. Okay, P&G. P&G is a consumer goods company. The products, household and personal care products, including brands like Tide, Cast, and Pampers. So pretty much we need diapers, regardless whether the economy is going up and down. Although P&G, like from all the value companies, I wouldn't really kind of stick them on the list here, but okay. Verizon Communications. So Verizon Communications is a telecommunication company. Obviously, if you're in the United States, you know about it. You probably have your plan. Although Verizon has had a tough month, and I think T-Mobile is growing much more than Verizon, and AT&T has a bigger dividend. So I don't know why it put Verizon here in front of AT&T, but here's AT&T. Is a telecommunication company that provides wireless, obviously, TV services and well advertising. Okay, good. As I said, AT&T I think has a better dividend than Verizon. So Verizon, P&G, strange moves. General Electric, this is pretty much one of the old guard. G was considered pretty much value for the last 20, 30, 40, 50 years. But in the last 20 years, its stock got hammered so much. So GE, although it is value, keep in mind that its stock has gone down substantially from its highs back in the day. General Electric is considered a conglomerate. Okay, so it didn't give us companies that, can you do you have other examples? Because these examples were given in another YouTube video. So somebody asked this question and I saw these same examples. So let's see if it knows other examples, because I'm really not a fan of these very much. Verizon, okay, we had that. Okay, now it's giving us Walmart. Walmart is a good staple, pretty much retailer, very stable. And even in recession periods, people go to Walmart because it's cheaper. So I would definitely put Walmart in front of, let's say, a P&G or a Verizon even. Okay, Coca-Cola, value play. Okay, that's good. Pfizer, Pfizer has been on a tear, but now because and last earnings report it went down tremendously because it's no longer expecting its kind of COVID money. And then Berkshire Hathaway. Berkshire is definitely a value play. So if you don't want to, Berkshire is pretty much a holding company. So it has its own businesses, but it also has investments in other companies, and it's very value oriented. So I would even put Berkshire in front of Coke or even Pfizer. Okay, so it does, for our purposes, for research purposes, it can give us some examples. So it knows what it's looking for. Let's see if it knows what is the historical return of value investing. Has historically been an investment strategy with many stocks, depending on what the value stocks are. Okay. According to research, there we go. According to James Madison, from 1926, wow, to 2015, value stocks in the United States have grown 10.5% per year, compared to 7.5% to the overall market. Huh? That's something that I did not know. So this is an interesting point here, that value stocks have outpaced the overall market. So this is a snippet of information that why I'm doing this course and why you should kind of use ChatGPT for research, because it's things like this that you won't really find anywhere else, or you would find it, but you really need to search for it. But here in conversations, it will give us really good pieces of information, and again help you decide your kind of, again, it's going to be your investment decision, but it's going to help you with the research. Other studies have also found their the value stocks have historically compared to the overall market substantial margin. I did not know that. However, it's important to keep in mind that the past performance is not okay. So this is something that it normally brings out. Past performance, not for future. You need to consult a financial advisor, things of that nature. Accordingly, performance of value stocks can vary from year to year, and it's over the long term. Obviously, when you're looking at kind of studies like this over 70, 80, 90, 100 years, then you should know that that is not applicable over a 1, 2, or 5 year period. So what value investing has a strong historical track record. It's important to research, and obviously we need to know that. So okay, good. Let's see. Is it better to value invest or growth invest? And this is pretty much going to be our last question for this one, and we're going to go in the next topic, which will be growth investing, and see what it thinks about that. The decision to whether to grow, value invest, or growth invest. Not to mention that I'm doing typos here, and it's still knowing what I'm thinking. Depends on a number of factors, including your investment goals, risk tolerances, and market development. Yes, value investing and reinvesting in stocks that are undervalued. Okay, we had that kind of sentence. Growth investing in stocks or companies that are growing, really expected to grow in the future. In general, value stocks that are less volatile. Okay, so this is interesting that we need to kind of end this note. In general, value stocks tend to be less volatile. So very important if you're kind of considering these two investing strategies. So value stocks, A, according to that study, have been outperformed the market, and B, are less volatile than growth stocks. So keep that in mind. I think value has been for a very long time, kind of, especially in the last 4 or 5 years, maybe even 10 years, because the fangs into technology companies have been such in all the talk has been around them. that we forgot about value stocks, but less volatile, higher returns over the longer period. So definitely something to think about at least. Offer more consistent returns over the long term, yes, but growth stocks can be higher returns, but may be more volatile. Yes, additionally, growth stocks may be more sustainable to investors who have a high risk tolerance and a comfortable sign of major to the overall market. Approach is depends on you. Should talk to your financial advisor about your financial situation and your risk tolerance. Okay, so great examples about value investing, what it is, how what companies we should do in the historical returns. So really, really good. Now let's go to the next one.